Everyone, how's it going? It's Thomas back at you with another video. And today I'm going to be doing an IPO video. You guys who watch my channel already know how this goes. I read through the S1 so that you don't have to, pointing out the things that I think are important for you to know about, and then giving my thoughts on some of these things, pointing out what I think is important, maybe some things that are important to you that maybe not are as important to me. But either way, the goal of this is for me to read through it so you don't have to and make a decision about what you're going to do with this investment. So without further ado, we're going to just go ahead and jump right into it. And as always, timestamps will be in the description. So today's company is Argo Blockchain PLC. And this one was a very interesting one for two reasons. The first is this is a Form F1, not an S1. And so this company is actually publicly traded. However, it's publicly traded out of the UK through the London Stock Exchange. So they're incorporated in England and Wales, which is a bit of a different situation than we're used to having. And so they're going to be going public on the American markets allegedly tomorrow, but we don't have proof of that yet. And this company is available for the Robinhood IPO access. The other interesting thing is they're a blockchain company, which means that they do all of their work in cryptocurrencies. And that's not something we've seen yet. So their numbers look interesting, their risks look interesting, and I'm just going to go through each of these things and point out to you guys what I think is important to note. So the first thing that I'm going to cover for you guys is the cash flow as well as the market cap. So actually, to start with this, the market cap right now on the IPO access, their price is set for $18.40 per share with a maximum of $22.08 per share. And they're set to have 7.5 million shares available in the US. This means that their market cap ranges from 1.3 billion all the way to 1.6 billion. So quite a substantial IPO here, not the biggest we've seen, but still not too shabby. And so to look at the cash flow now, this statement is very messy, and it's kind of one of the messiest ones I've seen thus far because they post both pounds and the dollars. So bear with me on this as we go through it, but we're going to have to kind of jump back and forth. So the first thing that I do want to point out is they have positive operating income, which is always exciting to see. Now, the exception is in 2019, but we do have to remember that there is COVID that was in effect at that time. So that definitely would have reason. It explains why their numbers are also lower at that time. However, as of 2020 and as of 2021, they have positive cash flow, which is great to see. Their revenues are pretty decent and, nothing too detrimental. The one thing that I do want to point out is that their depreciation on equipment is very high. So the direct costs for as of 2020, their direct costs were 15.47 billion. And so looking at that, their depreciation of mining equipment was 8.1 billion. So this company is depreciating a lot of equipment. And the thing we have to remember is they are a blockchain company. They deal in cryptocurrencies. That's the whole premise of their work. That's what they do. So it makes sense that depreciation is going to be very high. But at the same time, it's something to consider that they're burning through a lot of equipment. This could be a problem down the road looking at everything that's, going on. And especially as different laws come to pass and different rules regarding environmental laws and mining laws, we have to consider that. So with this depreciation, that is a little bit of a concern to me. Now, looking at 2021, their depreciation of mining equipment is it's less than like $2 billion in relation to direct costs. So this depreciation is looking to be one of their biggest costs, but nonetheless, they still have positive income, which is always great to see. And it's something that, is very assuring to me as an investor. So the next thing that I'm going to point out to you guys is the underwriters of this stock. And here's an interesting thing. We don't have any numbers on what shares are going to be given. Obviously, they have some decent underwriters. Jefferies LLC is a good one. They have Roth Capital Partners LLC. So they do have some good backing of this, which is great to see, but no distribution of stock to these underwriters, which is very interesting. It might be because it just has not been decided yet. That's almost a guarantee of it. And we don't have a number on what will be given to them if they choose to buy into the stock after 30 days as well. So neither of those numbers were available to us, which I found very interesting, maybe a little bit concerning, because, you know, that means going into this, we have no idea who is dictating what happens in this company. And I'm going to show you exactly what I mean by that in just a second here. I mean, obviously we see nothing with the underwriters, but it kind of goes a little bit more in with the shareholders as well. And so with that, to look at the shareholders, we have almost no substantial shareholder as dictated by the chart right here. There's a decent amount of shares being put out. However, every executive officer and director owns less than 1% of the shares in the company. So this is a very distributed amount of stock, in my opinion. Either a substantial amount of it's going to underwriters, or there is a large portion of it owned by the general public. Those are the only two things that I can really think of that are indicating why there's no major holding among these CEOs or these officers. Usually with these things, we see about a 10 to 11% holding for a chief executive officer. And that's generally a standard, maybe a little less, sometimes 7 to 11%, I think is a fairly accurate range of where each officer sits. This one, everybody holds less than 1%, which is a lot. That means that almost, I mean, we're looking at about 6 different officers here. Now, these are the people that are listed. There's obviously going to be more people in the company, but these people each dictate less than 1%, which means that close to 99% of the company is being run by someone else. The decisions are being made by someone else, which I don't really get. That's a little concerning to me to see that there's no substantial holder on the board of directors. Usually that's not a strategy for companies, but you know, maybe there's more here than meets the eye. Maybe there's something else that's going on with this company, but as of right now, we don't have these numbers to show a dictated holder. So it's going to be interesting to see who's exactly calling the shots in this company. So with that one, we're going to go ahead and jump over to the dividends, since the management here, I usually look at it, but there's no substantial holders. So I don't necessarily see a reason to look at the management, because we don't really need to know who is doing what if nobody has a specific say over what's going on. So the dividend policy is kind of the standard as usual. It's like, we have not declared or paid any dividends on our issued share capital. We intend to retain any earnings for us in our business and do not currently intend to pay dividends on our ordinary shares of ADS. The declaration and payment of any future dividends will be at the discretion of our board of directors and will depend on our results of operations, cash requirements, financial condition, contractual restrictions, and any future debt agreements or applicable laws and other factors that our board of directors may deem relevant. So, you know, it's kind of the standard. We're not going to issue dividends as of right now, but that is subject to change, and that could vary with time as it goes on. So nothing special there, nothing unusual. Pretty standard, nothing I'm really concerned about. So the next thing that I'm going to point out then is the dilution of the stock as a whole. And the dilution is kind of substantial here, in my opinion. Initially, they are expecting to go at $18.40 a share, but they're looking at a dilution about $5.30. So you're going to be expecting your stock to go from $18.40 down to $13.07, which is a substantial loss, especially if you're stuck with these stocks for 30 days. I mean, we can, you know, obviously things are going to change. This is not a guarantee, but this is a fair estimate of where they think they're going to be at. And with how little they have as far as investment in the stock, I can kind of see why. You know, there's no major holding in the stock. So it seems like it'll be very subject to fluctuation. And it seems like the volatility would be relatively high because there's just no substantial holder. There's so many people out there. Now, of course, that could go in reverse, but the fact of the matter is, since so many people will be holding the stock, especially with the Robinhood IPO access, we don't know what kind of popularity this is expecting. But with that being said, you know, if nobody holds the stock in a substantial way, then that means that everybody holding less than 1% doesn't dictate the price. And so, a little bit of a concern there. That's a high dilution. And especially after 30 days, I wouldn't be surprised if it drops a bit unless people fully believe in this. Now, there is that chance that people very much believe in what this company is about. And that could be a great thing. That could be, it's great for everybody if you believe in the company that you're backing. But at the same time, this is a very high dilution. And I would be lying if I didn't say this was a concern of mine. And so the next thing I'm going to point out is the risks. And these, I found quite a few that I think are interesting and that I want to mention. Now, these are obviously, some of them are just kind of standard and, nothing out of the usual, but I still want to point them out. So the first one that stood out to me is we are subject to many risks related to the development of new cryptocurrency mining facility in Texas. Delays or disruptions in our development of the Texas facility could materially and adversely affect our results of operations and financial condition. So right now they have facilities across the globe. They don't, I guess across the globe is a bit of a stretch, but they are located in multiple countries and they have a few US locations. This new one is going to be in Texas. I don't foresee them having issues finishing this. Texas is very much a pro-economic growth state. And so, them finishing this, I don't see it being a problem. But if there are laws that are passed that could create boundaries for this getting finished, then yes, they will be looking at a problem there. So the next thing that I wanted to point out, the next risk, is a majority of our revenue is currently derived from mining Bitcoin. If demand for Bitcoin declines and is not replaced by a new demand for cryptocurrencies, we are able to mine our business operating results and financial condition could be adversely affected. So this is kind of a goes without saying thing. You're on the blockchain. Of course, it's going to be affected. Makes sense. I understand it. But also, got to remember, as long as Bitcoin's popular, they have a successful business model. If another crypto becomes more popular, there's a good chance they could get on it. They are a mining network, so they don't have that working against them. But at the same time, it's important to understand where the majority of their capital is. So something to keep in mind there. So the next risk is we have in the past and may in the future seek to reduce the risk of holding Bitcoin and other cryptocurrencies on our balance sheet by engaging in hedging transactions, such as trading Bitcoin for alternative digital assets or stablecoins or purchasing Bitcoin futures contracts. Such efforts may be unsuccessful and could adversely impact our business, operating results, and financial condition. So this is kind of a counter to the previous risk, which they stated, which I think is kind of interesting, that the solution to their risk is another risk. But obviously some of this is just required to be stated. So they're looking to hedge the money that they have, which I think is a good call because crypto is very risky. There's no doubt about it. And so by switching this out could be beneficial. I see this as more of a benefit than a risk. However, depending on what type of digital asset they try to exchange it for. If they're exchanging Bitcoin for Dogecoin, not a good decision in my opinion. If they're exchanging it for Ethereum, it's okay. It's not bad. It's the next best thing, I suppose, unless they're exchanging for actual like US dollars or something along those lines, or pounds, whichever one they choose to go with. So the next risk that I found on their statement that I want to point out is this one right here, which states, the loss or destruction of any private keys required to access our digital assets may be irreversible. If we or any of our custodians are unable to access our private keys, whether due to a security incident or otherwise, it could cause direct financial loss, regulatory scrutiny, and reputational harm. So there's one thing I need you guys to understand with this, and I'm not a financial advisor. I'm not certified to give any financial advice, but cryptocurrency is guarded by keys. And your key gives you access to your crypto. It gives you access to your Bitcoin. That's how it's mined. If that's lost, there's no getting that back. It's done for. And so there's substantial risk with that. Now, this is kind of a given. If you're familiar with Bitcoin, this is not news to you. This is very, very much a thing. But it's to be understood. If they misplace this, if this gets lost, there's no getting this back. There's no insuring this like you insure money in a bank. It's not backed. It's there as long as they have access to it. So if at any point they lose that access, you lose your money. And that's just the reality of it there. The next risk that I want to point out is the regulatory and legislative developments related to climate change may materially adversely affect our brand, reputation, business, operating results, and financial condition. So this one kind of goes in line with the point I was making earlier. There's a lot of risk with just the attitude towards mining these days. There's a lot of laws and new laws being implemented around climate change, around the climate as a whole. So if they choose to impose more strict laws, more strict regulations, mining for these things, it's going to be more problematic for the companies going forwards, without a doubt. So that's something to keep in mind there when investing in this. And so the next one I want to point out is, as a foreign private issuer, we are exempt from a number of rules under US security laws and are permitted to file less information with the SEC than US public companies. And this kind of goes in line with this other one here. Our articles of association, to be effective in connection with this offering, will provide that the courts of England and Wales will be exclusive forum for the resolution of shareholder complaints and other complaints asserted in the cause of action arising under the Securities Act and Exchange Act. This essentially means that everything that happens within this company, any problems that arise, not any problems, but the majority of problems that arise, will be dictated by the trading laws under the London Security Exchange and under the UK. So if there's issues in the US, they're not subject to those. Since they are incorporated in the UK and in Wales, they are not subject to the same laws that US companies are subject to. They have several that they must follow, but they're not subject to all the same. So not all of their filings are required that are required by other companies, and that any problems that arise are subject to British law as opposed to American law. So that's two things to keep in mind. Now, I know that when I did my IPO video on Riskified, I discussed how they're based in Israel and that they had the same thing. Well, not based in Israel, but incorporated in Israel. It stated the same things, like any laws or any problems that come up will be resolved in the Israeli courts as opposed to the US courts. Now, that is a privilege which they get because of where they're incorporated, but that's something to be considered if you want to invest with this. Now, it's not likely that you're going to run into a lot of problems with this company just as an investor, but it's something to keep in mind. Any problems that you have will be brought up in the UK courts, not in the US courts, unless you can make a very plausible case for it. So there is probability there, but just understand what to expect with this. So those were all the risks that I saw with this company and all the ones I felt worth noting. Now, the final thing that I want to point out, which is interesting, is something that I haven't got to point out with any other company because I haven't done it, is the crypto holdings of this company. So this is the most recent one that I could find in here that was, relatively new, that like at least seemed up to date. So their highest holding, as you can see, is in Bitcoin, 183 tokens, valued at 3.9 billion pounds. Their second is Polkadot, which is kind of fascinating to me. Their second highest is Polkadot at 515 million, and followed by Ethereum, Binance, and then US dollar trader. It's a stable coin. And then they have a few alternative coins, which are not traditional. So something to be considered there. The majority of their holding is in Bitcoin. So that is something to point out earlier. Bitcoin holds the most weight in their portfolio, followed by Polkadot, which I don't really understand. I don't think Polkadot is a great initial investment to start off. I don't know why they're choosing it, but there's room for it. I wouldn't do Polkadot. I would do something like Cardano, something like that. But, to each his own. They see something in it and, that's what they want to do. But their holdings are as such. It's a relatively small variety. Not a lot of variety in there. I mean, they do have some alternative coins, but not enough to really dictate the price of it as a whole. And so anyways, this is everything that I found in this. Let me know what you guys think, whether or not you're going to be investing in this. I think I will be. This is kind of interesting. This is something new. Blockchain's growing. Mining for crypto is a really big thing right now. I see a lot of potential here. It's a bit of a risky investment without a doubt, but I think it will be worth it with everything considered in the long term. But let me know what you guys think in the comments below. Let me know if you will be investing in this company. Let me know if it's something that you think has a good chance of paying out or if it's too risky for you. And as always, make sure to like, share, comment, and subscribe for future content. And I will see all of you guys again in the next video.